Don't fall for the Bitcoin price, which is hovering at about $41,000. Don't fall for it, because it looks like nothing's happening on the market, but there is a lot that is happening this week. And that's what we're going to talk about today. We're going to talk about everything that is happening on the market this week in Bitcoin and in altcoins. And there is a lot happening. And then I'm going to show you something. I'm going to show you the one mistake that has cost me millions of dollars. And if you're a retail investor, it's costing you millions of dollars. And that mistake is around swimming with the sharks, because we are swimming with the sharks. And I guarantee you that you've been making this mistake. Miles has been making this mistake. Fred's been making this mistake. I've been making this mistake. So if we're making this mistake, you're making this mistake. But if you know what to look for, you can fix it and you can save your portfolio millions of dollars. This is the one mistake that is costing crypto investors more than any other mistake. That's what we're going to talk about today. Yo, it's going to be a big week, so get up, get out of bed. Today we're going to talk about Bitcoin, altcoins. I've got some big news for you on Ethereum. I've got some big news for you on Luna. I've got some big news for you on Fantom. I've got some big news for you on Tomb. I've got other big altcoins that we're going to talk about. Not all good news, some good news, some bad news. Then we're going to talk about something super important. I'm going to show you where you are losing most your money on your portfolio. A lot of people don't want me to talk about this because it's not in their best interest. Because if you are losing money, they are making money. And if you are making money, they are losing money. So today, I've been thinking about it long and hard. And I've decided that today I'm actually going to expose this. And I'm going to show you how to protect your portfolios, because it feels like you're doing the right thing, but you're not. So that's what today is all about. Welcome back, guys. Welcome back, Banter fam. I'm Cryptomanran, and I'm here to protect you in the bull market and in the bear market. And today I've got a full studio with me. I've got Freddie. I've got our man Miles in the studio. Everyone's here in the studio. So it's going to be a fun show. If you're new to the channel, then do this. Just quickly subscribe to the channel, like this content, help us get this content out there. By subscribing, that is how you tell everyone that we're doing good shit. And today is all about doing good shit. It is about protecting our community at all costs and protecting our community against the sharks. I did steal that thumbnail. You know I stole that thumbnail from Mr. Beast. He knows. Everyone knows I stole that thumbnail from Mr. Beast. But it's true, because you are actually swimming with sharks. And you can choose whether, when you're swimming with sharks, whether you want to be a shark or a whale, or whether you want to be a little sardine and then get eaten up by the shark. Because if you're a sardine, then you're a retail investor. And if you're losing money to the sharks, it's because you are retail. And what we want to try and do today is make sure that you are not retail and you don't get eaten up by the sharks. You don't act as exit liquidity for sharks. I'm going to show you one mistake that every single crypto investor is making. I make the mistake myself, and we're going to fix it. And we're never going to make that mistake ever again after today. That's my guarantee to you. So let's get on with it. Let's start off. We've got a lot to get through. We got to put pressure on the like button. Smash the like button. Help me get this show out there, guys, because help me protect everybody else. Let's look at the prices. Let's get into it. We got Afrikaans people there. All right, so this is where we are. Now, we're not at the weekend highs. So you could see we're at 40,820. We're not at the weekend highs. We were at 42,500, depending on the size, on when you looked at it over the weekend. And then we started coming down, now we're just under 41,000. What is it that is causing the market to go slightly down? Well, the answer is not actually in the Bitcoin chart. The answer is if you look over here. So if you look at investing.com, you will see that the commodity price is up again. You look at things like heating oil, up 6% today. You look at things like London gas oil, up 7.8% today. And if you look at the commodity prices, you can see that it's a great day on the commodity market. If you're an oil trader, it's a great day for you. So you see oil is now back at $112. And if you look at oil, oil is pretty much looking on this, it's sticking on this trend line. And it just touched the trend line, and then it bounced straight off the trend line, and now it's going up again. If you look at the Goldman Sachs Commodity Index, exactly the same picture. Just touched the trend line and bounced straight back up off the trend line. So this is telling you that what's happening in the market, the reason why the markets are nervous, the reason why the Bitcoin price came slightly down must be because of Russia, Ukraine. So what is it that's happening in Russia, Ukraine, and why is the market coming down? Last week, we had a great week. We had an amazing week. In fact, if you look at last week on the markets, this is quite a great stat. For the 5th time ever, the S&P 500 gained at least 1% for 4 consecutive days. Now, every time that's happened, the S&P's gone up an additional 20%. So we had a fantastic week last week, and that's because last week's narrative was peace. The narrative last week was around peace talks and how the peace talks are progressing, and it felt like we were getting to some kind of peace between Russia and Ukraine. But things in Russia and Ukraine seem to have escalated this week. So what we started to see was the Russians basically giving the Ukrainians an ultimatum to surrender Mariupol. And they gave them until a certain date. They gave them a couple of hours to surrender Mariupol. And of course, the Ukrainians declined this. The Ukrainians basically said, look, we're not going to surrender Mariupol. And it's not an option. So the Ukrainians pushing back once again. Then the Ukrainian prime minister came out and he said, of course, we do not accept these kind of Russian proposals. And they started sending buses into Mariupol to actually get civilians out of Mariupol. So this whole thing is around this thing on Mariupol, and Russia saying, you got to give up Mariupol, otherwise we're going to invade it. And Ukraine saying, no, we're not doing it. We're not doing it. And so that's the change in narrative. The change in narrative went from peace to when are we getting a peace situation to a completely different narrative. And this narrative is now, well, if you look at Donetsk and you look at the leader of Donetsk, which is of course pro-Russian, he's saying that it'll take Russia less than 1 week to capture Mariupol. So this whole thing is around Mariupol. What I did read here, which I think was quite interesting, is a guy called Amichai Stein, and he's a correspondent at KANN. And he says, Ukrainian officials tell me tonight, Russians are trying to sell to the world as if a deal is almost done. And the reason why they're trying to sell this to the world is because they want to avoid further sanctions. So they kind of know that if they sell to the world that they're making peace, the world will slow down on the sanctions. Maybe it will slow down on sanctioning their oligarchs or just sanctioning or giving Russia more sanctions that they right now can't really afford. So Russia wants this narrative of peace, but at the same time, they are fighting a war and they need Ukraine, or they've now threatened Ukraine with Mariupol. We also did get some news. Now, remember, again, this is all social media and this is all what people want you to hear, but we did get a message on a tweet on FX Hedge that said, Ukraine intelligence claims mercenaries connected to Russia's Wagner group have arrived in Ukraine to assassinate Zelensky. So now they're talking about, again, increasing, taking out Zelensky and basically increasing the tensions there. And that's what's causing the markets to go down. And if you look at the markets that are going down, let's look at what's happening. It's not bad out there. It's not bad out there. You're looking at the S&P, the US 30 down 0.64%, the NASDAQ down 1.31%, the S&P 500 down 0.6%. You're looking at commodities. Commodities are a whole lot higher. Oil is a whole lot higher, $1.15 again. As I said, bounced straight off the trend line. So that is what's happening on markets. On the crypto markets, not so bad. Not so bad. In fact, I'm not even going to say bad. I'm going to say crypto markets actually looking super bullish. And you wouldn't know that if you just looked at the price, because if you looked at the price, what you would see is you would see the Bitcoin price and you'd see the trend that was broken and now coming down to possibly retest this trend line before we continue going up. And Bitcoin trading at $41,000. That's what you would see if you looked at the Bitcoin price. But smart investors aren't looking at the Bitcoin price. Smart investors are looking at things under the Bitcoin price. And if you look just a little bit deeper, than the Bitcoin price. What you can see is that there are some signs that are pointing to very high confidence in crypto. The first one of those is you can see the funding rate on FTX. Now, the funding rate is the rate that people borrow, the rate that people pay to borrow money to go long on Bitcoin. So if you don't have any money and you need money and you want to go long on Bitcoin, you have to pay to borrow Bitcoin. Now, that rate has been around under 2%. And today, for the first time, the rate jumped to 3% and is now hovering at around 2.63%, which means that people are feeling a little more bullish. People are looking to take leverage. And for them to take leverage to actually start longing Bitcoin, they're willing to pay more. They're willing to pay more. When the rate goes negative, it means that the shorters are in control. When the rate goes positive, it means that people are willing to pay more money to borrow to actually buy Bitcoin that they don't have. That's a very bullish sign. But if you just looked at the Bitcoin price, the 41,000, you wouldn't have seen that. You wouldn't have seen that. The other thing that you want to be looking at is you want to be looking at the dominance chart, because that dominance chart shows you the confidence that crypto people have. And remember, crypto people, what they'll do is they'll move their money from Bitcoin to altcoins when they're bullish. And you can see that that trend was broken last week on the way down. And that continuation, we're continuing the trend of people feeling more bullish about altcoins than they're feeling about Bitcoin. And so that's another sign that is giving me a whole lot more confidence. That Bitcoin dominance is actually being led primarily by one chart. And that is this chart over here, which is the ETH BTC chart, which shows the price of ETH relative to BTC. And again, what you can see, there's been a breakout of the price of ETH relative to BTC. There's been a retest, or there is a retest, or there has been a retest. Carl, would you say that is a retest, or would you say that there's still a retest to come?
Carl's bearish. I would say that if you put a horizontal through there, you'll see a bit better, because that's going to be subjective.
You said that's going to be subjective, so I should put a horizontal into it.
Try horizontal.
I will try horizontal. Okay, so that's the other chart that is showing us a positive, a break in momentum. We've broken this trend over here, and it looks like money is starting to flow from Bitcoin into altcoins. When money flows from Bitcoin into altcoins, that shows confidence in the market. So we've got this confidence back in the market, and it is driving the market going forward. So why are people moving their money into Ethereum? Well, that is because we now have a date for the merge between proof of work and proof of stake. So that's a massive part of ETH migrating to ETH 2.0. And there is now a date. The merge is scheduled for June 22nd, which is about 3 months away. Now, why all of a sudden is money starting to flow into ETH? And a lot of money is now starting to flow into ETH. We saw ETH going off exchanges, and we saw ETH being staked into the Beacon chain. Why is that happening? So let me show you why it's happening. Why are people responding now? The first thing is, you know that the merge is when we move from proof of work to proof of stake. There is already a testnet for this. So this testnet has now been launched, and it's working. It's called the Kiln testnet. When ETH moves from proof of work to proof of stake, a couple of things happen. The most interesting thing that happens is that the new ETH issuance is reduced by 90%. So right now, ETH emissions, ETH releases 12,000 ETH a day to pay miners, because remember, the miners are proof of work miners, like Bitcoin miners. They use a lot of electricity. It's not a green form of mining. But when we move to the proof of stake chain, the emissions for Ethereum get cut, and they get cut by 90%. So we're going down from 12,000 to 1,280 ETH per day. So there's going to be a whole lot less ETH in the market. Now, I want to show you how this plays out in reality. If you go to Watch the Burn, this is a site that shows you how many Ethereum are being burnt because of EIP 1559. And even though a lot of people talk about ETH being deflationary, ETH is not actually deflationary, and I'll show you why. If you look at the number of ETH that were released today, the rewards, 3 million ETH were released today. Since this is not today, let's talk about since the beginning of time. But 2 million have been burnt, which means that net, we still have 1 million extra ETH. But after ETH 2.0, when the emission schedule goes down by 90%, the burn schedule remains exactly the same. And so now all of a sudden, you've got a whole lot less ETH in circulation, and ETH really becomes deflationary. So that's the first thing. The second thing is that in order to reward the new miners, now remember in the old proof of work system, you reward miners for running expensive hardware and spending on electricity. You reward them with what they said is 12,000 ETH every single day. In the new proof of stake, you will take the rewards and you will give the rewards to the proof of stake delegators. And so what's going to happen when they merge is that currently people that are earning 4.7% by staking their ETH will start earning between 10 to 15% for staking their ETH. So there's a massive incentive to be staking ETH, because in June, you're going to start earning 10 to 15% on your ETH. And so this is the deposit contract in the ETH 2.0 proof of stake account or chain. But what you can see is that the deposits are increasing because people are going to want this 10 to 15% going into ETH. And remember, the biggest thing around ETH 2.0 is that it makes ETH much faster, and it makes ETH much more energy efficient. And so finally, it looks like in June 2022, all this is happening, and that's why people are now starting to move to ETH. Yeah. ETH's not the only altcoin we're going to talk about. Let's talk about some other altcoins. Freddie, what altcoins are you talking about, bro?
Sure. So I'm building a pretty big ETH position.
You're building an ETH position?
For the minute, yeah.
You made a lot of money. Hold on. Let me get you on the stream. Hold on a second. I'm giving you on the stream. Tell us about your leveraged long last week.
So it's the first long I've taken in weeks. I just got my tinglies, and I knew the Avax conference pump was coming. And yeah, I took an Avax at a YanivNeuNer position, and I've just been printing for the last week and a half.
And did you close, or did you close your long?
I've closed all my positions for now. Yeah.
Okay. So you're not holding Avalanche. You're not holding Avalanche ahead of the Avalanche.
Nah, sell the news.
Okay, so you got the Avalanche Summit, which starts tomorrow. Mm-hmm. I see that there's a thing here that says watch live stream. So you can see that you might be able to watch this for free as a live stream. We'll definitely be watching it. We're not there. We will definitely be watching it. I think that you guys should go here. It's avalanchesummit.com, and you can watch the live stream to see what's coming out. Traditionally, though, after or in the middle of the conferences and the DevCons, the price starts to go down because all the good news is out in the market, and it's a buy the rumor, sell the news situation. Anyway, in the interim, what you would have noticed if you go down the altcoins, you would have noticed that you've got Terra on a 34 billion market cap, you got Cardano, you got Solana, and you got Avalanche, all of them trading at about $90. So if you looked on the weekend, you had Solana at $90, Avalanche at $90, Terra at $90. And if you look at this graphic shows it brilliantly. So you've got Solana. Solana's been up as high as 260, and it's come down to $90. You've got Avax. Avax has been to about 130, and it's come down to $90. And then you've got Luna, which is hitting for the first time. So I asked the question on my Twitter. They were all trading at 80 or 90, but which one hits $250 first? Avax, Luna, or Solana?
I think Avax actually.
Fred says? Avax. Carl, what do you say?
I voted Avax as well.
Miles, what do you say?
Luna.
Oh. All right, so this is an interesting question, because which one of these hits $250 first? Which one of them is better? Do you vote for the one that's already been on 260 and just come down, because it's always better, much easier to go to somewhere that you've been because investors accept that? Do you go for Avalanche because of all the noise that's happening, or do you go for Luna even though Luna's got to break new highs? Hustle, what do you go for, bro?
I've been on the Avalanche wave at this point. I've actually been riding Avalanche up quite a bit. I'm super bullish on the gaming ecosystem going forward, but no, right now is not the time to put your dollars into Avalanche. It's definitely, traditionally speaking,
like 250 first, Luna, Avalanche, or Solana?
Whew, that's so tough. I will keep on my my wave of Avalanche. I think the utility of the subnets they'll provide for the gaming ecosystem that's coming in, the AAA games, the Cribatas that do hundreds of thousands of transactions every day. I'll take Avalanche to get a ton of activity and get to 250 first.
Okay, so I think I don't know what the answer is. Tomorrow, I'm going to make a show. Whew, I'm so scared to do this. Tomorrow, I'm going to make a show telling you guys why I'm selling some of my Luna. Tomorrow, it's going to be a big show. Oh, Miles says, oh no. Don't worry, Miles. It's all good, bro. It's all good. Speaking of which, I did say that Luna's going to get to 100 by end March, and Astra is going to get to $3 by end March. How am I doing on my thing? Let's quickly see. So we know Luna's at 95. Let's see where Astroport is. Oh, Astroport's on $2.13. Do you think that in the next 9 days, I'm going to get to where I need to get to?
I actually do.
You think so?
I do.
Okay, well, let's see if my prediction came right. One of my other prediction, someone says BitBoy said that Avax would be the highest gainer in the short term.
So it's going to be
I'm not going to, if BitBoy says, then it has to be that. Listen, BitBoy knows. He knows. Yes, people that tell him. Speaking of predictions, I did tell you guys that I think that ApeCoin was a short. You remember I took that short on ApeCoin at $15. I'm in the money, but funding is costing me a lot. But I'm in the money now, and I'm still not closing my short. I'm keeping my short open for quite a while. I think this thing can get down to $5, $6, $7, $8, and that's when I'm going to close my short. And I'm actually going to take a long position. I'm going to hold the long position for a long time, because even though I think it's going to go up, even though I think that the price is going to go up long term, I think short term, I think there's a problem, and that's when we're going to talk about. We're going to talk about that later today on the show. Also, I mean, I do think long term it's a good thing, and Time Magazine is now accepting ApeCoin for digital subscription. How's that? So, who would have thought that Time Magazine would be accepting ApeCoin for digital subscription? Who would have thought? I'm going to start accumulating, but not yet. $10 is too expensive.
How's your short going, actually?
I'm up a lot. I shorted at 15.
Well done.
All right, another thing which we should talk about is the Web3 Index. Now, this takes the Web3 tokens, and what it does is it looks for the fees generated by the tokens. And what you can see is that of all the Web3 adoption, Arweave has the highest adoption and the highest usage and the highest fees generated by a long shot. And we have been talking to you guys about buying Arweave. I think we need to carry on buying Arweave. I think it's still cheap. That is one of the ones that we're still very much looking at. Let's go. Let's look at some more altcoin news. I feel like a degen today. We're like degening into so many altcoins, but I just feel like it's while we're here, let's go with it. Let's go with it. If you want me to go back to being a Bitcoin maxi, let me know, and then we can talk about the Bitcoin bonds, and we'll talk about the big news of how the Bitcoin bond is oversubscribed. The $1 billion worth of Bitcoin bond in El Salvador has now $1.5 billion worth of subscription. That is our Bitcoin news for today. Let's carry on degening. Tomb. Okay, so why is this important? Why am I even talking to you about Tomb? Remember that TShares only start printing. You only start earning money on your TShares when the peg hits 90. It hits 1-to-1, and now the peg went down to 90.9 when the Fantom fat happened. Now the peg is back at 98. Remember, keep watching this, because if the peg goes near $1, you want to be holding TShares when that happens, because that's when the TShares start to print, right? So that's another one. What else in altcoins? Let's see. What else is there in altcoins? Let's look at this portfolio. So this is the portfolio. Remember that I had that Kucoin portfolio, which we started at 50,000. It went down to 37,000. Then I started to invest it in what I thought would recover. And I said, these are pretty degen tokens. They're not like, this is not safe. There's no Bitcoin or Ethereum. That portfolio I invested $37,000. It went down to $21,000. And now it's at 45, 60. It was at 41 earlier. Why am I showing you this? Because what I want you guys to see is that I picked some tokens that are quite risky, but I have conviction in all of them. I think they'll all survive a bear market if we're in a bear market. And just by holding it, I'm not trading in and out. I'm just going to hold. Already, I've recovered from 21,000 back to 40,000. and I'm going to continue to recover. I'm going to continue to recover. I'm going to continue to hold them until the thesis changes. Also, I did show you guys this before. If you do want to see your portfolio in one place, which I think is one of the most useful tools in the entire world. If you want to see your MetaMask, your Binance, your Kucoin all in one place, live, real time, I use CoinStats. You can use CoinStats. There's a referral link in the description. And yeah, you can use it. I mean, it's the most comfortable tool ever. You wake up in the morning, one app shows you everything, shows you all the price changes, shows you everything. Alrighty, is there anything else? Is there anything else we should talk about before we talk about?
We should tell them that microdose is a fantastic channel.
Oh, okay. Let's talk about that. Let's quickly talk about that. So before we get into the meat of the show, let's quickly look at a couple of things. The first thing is the website. Freddie, this was a stroke of genius. This morning brew was a stroke of genius.
Tommy.
Unbelievable. So this is amazing. This is the morning brew, comes out every single day. It's on our website. We're going to talk about the mistake. Don't worry, everyone calm down. How many likes have we got? Let's if there's lots of likes, we talk about the mistake. If there's no like, we just switch the stream off. We talk about the mistake tomorrow instead of why I'm selling Luna. How's that?
1.2.
Okay, so we've got 1,200 likes. When we get to 2,500 likes, I tell you guys about the mistake. So this is important because it has everything that's happening this week in one read. If you want to win one of the Fantom Starter NFTs, now remember, Fantom Starter is a launchpad on multiple protocols, not only on Fantom, and you have an NFT, and the NFT allows you to buy or to get into the allocations. Now, right now, there's not many people fighting to get into allocations, but when the bull market comes, and the bull market will come, people are going to want in, and those NFTs are going to be worth a lot of money, and they're going to give you access. So if you want those, go to any story on the website, but let's start off with the morning brew, because the morning brew is a good one. And just leave us your comment. Tell us what you think. Remember, you got to log in using your Twitter handle. That makes you who you are. There's also an amazing chart of the day. Can you see what chart that is? It's the Astroport chart, which, what does it say? Does it say that we're going to go to $3?
It's $3.
Don't say it. Don't say it. Let them go there. Let them go there. Freddie. Also, remember, if you are time-starved, if you are time-starved and you want to know everything that's happening on Banter in one place in less than 10 minutes, I'm going to let you in a little secret. Little secret. Okay, I'll show you a little secret. You go onto YouTube and you go Crypto Banter microdose. And you'll see that there's a whole channel here dedicated to 5 minutes and 10 minutes of programming. So 3 minutes, 4 minutes, 5 minutes. So go there, subscribe to Crypto Banter microdose. That's where you can, and hit the bell notification. You see that little bell? Very important that you hit it. Subscribe to it, and you basically will get little microdoses of crypto content. Because we know you guys are time-starved. We know that not everyone has 28 minutes or 50 minutes to listen to one of our shows. Do we have the 2,500 likes? Just check. While you're checking, I need you guys to do me another favor. We should you guys to do me another favor. So, okay, so I have a brother. He's much nicer than me. He's a much nicer person than me. Sold his company to Gemini. Very good guy. Anyway, long story short, I'm trying to get him some Twitter followers. He's very smart and he's got massive alpha. So what you need to do is just go to this tweet here, join him. So be a subscriber, and then just let me know what number follower you were. So example, let me show you. So if you were, yes, I'm helping my brother. So what? If you were 2795, and just let me know that you were 2795, 2796. Let's see how the numbers work here. Okay, what else? Do we have 2,500 likes? Do we end the stream now, or do we talk about the biggest mistake that everybody makes? It's a big mistake because you are swimming with the sharks.
Smash the likes, guys. Come on.
Okay, see, Miles doesn't know what this mistake is, and he's dying to know what the mistake is.
I want to find out.
Miles wants to find out. Everybody wants to find out. Everybody wants to find out. All right, let's do it. We've got 2,500 likes. I'm going to just pause until we get 2,500 likes. All right, let's do this. Do we have 2,500 likes? Can I start? Can't start.
1.9.
1.9. Okay, we're getting there. We're getting there. 2,000 lakhs. We're getting there. We're getting there. So I'm going to start off and say to you, we've all seen this chart before. And before I talk about this mistake, I've got to say something. I've got to say something here. There are a lot of people that don't want me to talk about this mistake. And that is because the more you know about this mistake, the smarter you become, the less money they're going to make. And the less money they make, that means that they don't want you to know this. And so today I'm going to show you something that a lot of people are going to hate me for doing it, for sharing it with you. But I'm going to show it to you guys anyway. And the reason why I'm going to show it to you guys anyway is because we always tell you that Hodl is the best strategy. But Hodl is actually not the best strategy. Because if you bought here, right here, as you can see, and every token that I talk about in this section of the show, number one, I hold. Number two, I think is a good token. So I'm talking about them because I hold them and I think they're good tokens. And I think it's a safe space for me to hold, to show you this. So I'm showing you the idea so that you learn, not the thing. But Hodl is not necessarily the best strategy, because if you would have bought Moonbeam at $14 or even at $10 or even at $8, it wasn't the best strategy. And we always tell you that the best strategy is to find protocols that you like, to find blockchain applications that you like, and to buy them and to hold them. But that's not exactly true. That's not exactly true. Because you need to, first of all, you need to decide when a good time to buy them is. And then there are some tokens where Hodl is actually not the best strategy, or it's not always the best strategy. And that is what I want to talk to you guys about today. I want to show you when Hodl is not the best strategy. And that is because most of us, someone said I was their daily microdose. So, yeah. Now, the reason why I want to show you this is because the people that lose the most money in the pumps and the dumps are the retail investors. The people that lose the most money are the retail investors. And the people that make the most money are the team, the venture capitalists, and the early investors. So I want to show you how to protect yourself against this. And it's important that I show you. And the reason why it's so important that I show you this is because most of us come from a traditional investing background. And a traditional investing background says that what you need to be doing is you need to be buying protocols or tools or products that you like and that you buy. So if you use Amazon and Amazon works for you and you like it, buy Amazon, because over time, more people will use Amazon and the product will grow. And so in traditional investing, we come here with a traditional investing mindset. And in traditional investing, it is actually a good theory. If you use something, buy it, hold it, and it will grow. If you like a service, buy it, hold it, and over time it will grow. But that is in traditional investing. And in token investing or in blockchain investing, that's not always true, because we have something that traditional investing doesn't have. We have a thing called tokenomics. Traditional investing doesn't really have tokenomics. We have tokenomics in blockchain investing. And you've got to understand what tokenomics are and how to use them to your benefit. Because if you're looking at a blockchain protocol and you don't understand what tokenomics are, and you don't understand how tokenomics work, then the truth is that you're swimming with the sharks. And not only are you swimming with the sharks, but you're swimming with the sharks in a pool that keeps getting more and more water. And the more water that goes into the pool, the harder it is for you to swim, the harder it is for you to stay above the water. And so it's super important that you understand tokenomics before you make an investment. So what are tokenomics? Why are tokenomics so important? Tokenomics, quite simply, are how tokens are distributed. In other words, who gets them and how they come onto the market. And every single project in the world has tokenomics. Bitcoin has tokenomics. The Bitcoin tokenomics are that right now, or in the beginning, there was no tokens issued to the founders, no tokens issued to the team, no tokens issued to advisors. And Bitcoin tokenomics were that Bitcoin was mined. And every block that was mined, I think, got 50 Bitcoin, and then got 25 Bitcoin, and then got 12.5 Bitcoin. And now every block that gets mined gets 6.25 Bitcoin. And in a couple of years, it becomes 3.25 Bitcoin. And so you know that there will be Bitcoin coming onto the market every couple of minutes until we eventually hit 21 million Bitcoin. And I want to show you how this works. So Bitcoin has two valuations, just like every other token in the world has two valuations. It has a fully diluted market valuation, and it has a market cap. The fully diluted assumes that all the tokens are in the market. So in this case, 21 million tokens are in the market. The circulating supply refers to the number of tokens that are already in the market. So we know that already there are 18,989,806 Bitcoin tokens in the market. And we know that in a couple of years, 2140, when is it? 2140, I think it is. There will be 21 million Bitcoin into the market. And we know how those Bitcoin are released. Every 10 minutes, 6.25 Bitcoin are released into the market. And when you make a decision to buy Bitcoin, you know exactly what you're buying. You know you're buying a token where there are 19 million in the market today, and every 10 minutes, 6.25 are going to be in the market. And you know that before you buy it. That's why you're comfortable to buy Bitcoin. And the same thing with Ethereum. If we look at Ethereum, you go to ETH, and it says, so ETH has a supply which doesn't end because it keeps releasing tokens. But we know the emission schedule on which ETH is releasing tokens, and we also know that Ethereum tokens are now burnt as a result of EIP 1559. Every single token in the world has two things. It has a breakdown of where the tokens are going and how quickly they're going to come onto the market. So I want to show you how to find this information. Let's look at Moonbeam. And again, I'm saying this, I'm an investor in Moonbeam. Specifically, I want to show you what happened here. Why is it that here, the price went to $14, and all of a sudden, the market started to collapse, and today, this great token is now trading at $2.63. Who were the people that bought over here? That is how you're going to become smart. So every single token has what they call tokenomics. The tokenomics refer to who's got the tokens and how quickly they're going to be coming onto the market. So in this case, what we know is that there's a pie chart which shows who has the Moonbeam tokens. Where are these Moonbeam tokens allocated? You can see that some of them have gone to the seed funding, some of them have gone to strategic funding, some of them have gone to the people that loan the parachain auctions, some of them have gone to liquidity programs, some of them have gone to key partners and advisors, some of them have gone to the team, to the treasury, etc., etc. And there's a breakdown of where these tokens have gone. The more important thing is, when will these tokens be hitting the market? And for that, what you need to do is you need to look for what they call an emission schedule. And the emission schedule shows you when these tokens are going to be hitting the market. So here we go. It shows you that in the beginning, very few tokens are going to be in the market. You see that about 250 of the 1 billion are going to be in the market. It's a very small percentage of a token, which makes the token very, 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 very scarce. And so if you're buying the token in the beginning, if you're buying it over here, you're buying it when there are only 250 of the tokens in the market. But then what happens? As you hodl, more water is going into the pool. So for every day that you're hodling, the pool gets deeper and deeper and deeper. So you bought over here, and then they are dropping more tokens on you. Who's dropping the tokens? Well, look here. After month 3, the people that put the seed funding in start to get their money. And you start to drown in the seed funding people, the people that gave them the early finance. So what they did here, look at this, was they created a scenario where they kept the tokens very, very, very tight. You get the launch very, 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 very tight, right? And then it feels like the price is up and they boast how this is amazing. And then they start to release the tokens into the market. And as the tokens start to release into the market, the price of the token goes down because there's all of a sudden more tokens in circulation and less buyers. So if you bought over here, you were the retail hype that said, oh, Moonbeam is amazing. I love Moonbeam. It's the best thing in the whole world. It's an Ethereum virtual machine on EVM on Polkadot. Wow, what an amazing concept. Hype, 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 hype. And then when they've got maximum hype and the price goes up, what do? They release the tokens. Who starts to get their tokens? You see, they don't release any strategic funding or any seed tokens in the beginning because they need to pump the price. And then when the price is up, then they start rewarding their VCs. Now it gets super interesting. What you can see here is that when this happened, the price was still quite high. $10, $12, $10. Let's go and look at what the VCs actually paid. Oh, the seed price was 1 cent. So the people that bought at the seed funding price, paid 1 cent. Now remember, guys, I'm not sure how accurate this information is to a T. This is all information on the internet, but the concept applies. And remember that I love Moonbeam. I love it. I actually hold Moonbeam. And I didn't buy it to ICO. I wasn't an investor. The strategic, which is these guys over here, the strategic, which is these guys, strategic, the purple guys, they paid slightly more. They paid, let's quickly check the exact thing here. They paid 5 cents. So the seed paid 1 cent. The strategic paid 5 cents. 5 cents, yeah, 5 cents. The ICO price paid 25 cents. And then their tokens start to get released. But when the tokens start to get released, the token's trading at $7, $7, $6. Who's buying them? Retail. Retail is buying them from people that paid 1 cent and 2 cent and 3 cent. And so what you need to understand is before you make any investment in the whole world, you need to look at who got the tokens, but more importantly, you need to get a visual of when those tokens will come into the market. And even if you think the protocol is brilliant, and it probably is brilliant, you need to make a choice as to when you want to be buying. Because if you're about to drown here as they release everybody else's token, and you create the pump, because there's so few tokens in the beginning, you create the pump, and then they start giving everybody else their tokens, then you are retail. You are the sardine in the tank. That's you. And then, I'm not saying that the price will never get there again, because I do think the price will get there again, but it's going to take you a long, long, long time to see your money. Because you are consistently swimming in a pool for the next, look how long, until more and more and more and more tokens come into the pool. So unless the protocol can generate more demand that is coming into the token, the price is almost guaranteed to decline. Now again, full disclosure, I wasn't an early stage investor in Moonbeam. I did land up actually buying some at $2 because I thought or $2 around there, because I thought that it had been hit hard enough. Let's look at another one. Every single project has this. So if you look at Solana, Solana also had it. So this is where the money went to Solana. And look what happened in December 2020. All of a sudden, they released a whole lot of different tokens and the price went down when it happened. So what you've got to look at is you've got to look at two things. In fact, you've got to look at three things. You've got to look at the fully diluted market valuation. Let's look at an example here. Let's look at this. You want to look at the fully diluted market valuation. In this case, the fully diluted market valuation isn't even there because it's a billion. Okay, so there's a billion tokens, of which only 200,000 of them have been released. 200 million have been released. So only 20% have been released. And for the next while, you're going to get token emissions until eventually we get to a billion tokens, which is cool, as long as they happen responsibly And it's not the VCs that bought in at 1 cent and 2 cent getting their tokens so that they can dump it on you, right? Same thing, let's look at some of the others. And again, these are all tokens which I hold, by the way. They're all tokens which I hold. They're all tokens which I think are good, but you have to learn this. Let's look at an Injective Protocol. So you got Injective Protocol. They were very, very smart. So this is very smart. So what you'll see here is Injective Protocol didn't give the team any allocations for a long time. And they didn't give the private cell and the seed cell any of their tokens for a long, long, long time. And so for a long time, they gave the protocol time to grow before they started to drown people in tokens. And that is a much more responsible approach. They didn't let the VCs dump on retail on day one. You see, they didn't let the VCs dump on retail on day one. They made the VCs wait about a year before they could actually dump any tokens. Now that's a very smart approach. Why? Because if you look at the price in Feb 2001 of Injective Protocol, let's quickly look at the price of Injective Protocol in Feb 2001. Did I not have that here? Let's have a look here. Okay, let's have a look here. Injective Protocol. Let's have a look here. Injective USDT. Let's look at the price in 2001. What happened there? Let's try that again. Okay, Injective Protocol. Let's quickly just look at when the release was. So the release was, here we go. Okay, release was around March 2001. So what happened in March 2021? So what happened in March 2021? You see, by that time, the price was pretty high. That's probably where it was. But then you see what happened. The VCs got some of their tokens, and the price came down while the VCs sold their first tranche of tokens. Okay, so you see that. So again, this is, for me, it was a much more responsible approach. Why? Because what you can see here is that you're not drowning in VC tokens. You're not drowning in VC tokens. You're drowning in ecosystem development tokens. That's cool. I don't mind drowning in tokens that are being used to grow the community, to grow the ecosystem. I don't mind drowning in those tokens. You got to be careful that you're not drowning in the sharks tokens. You got to be careful that you're not swimming with the sharks and that you're buying their tokens, their liquidity. And I say this because we're VCs and we get opportunities to get into here, and we want to highlight to you that this is happening out there. And you guys have got to know, you got to be smart enough to be able to educate yourselves so that you don't become the feed for the sharks, the liquidity, the exit liquidity for the sharks. It's super important. And again, I can go through and I can show you guys tons and tons of these examples. I think you got to break it up into 3 types of liquidity. The one type of liquidity is where tokens come onto the market because work is being done. So Bitcoin, more Bitcoin get released into the market because the proof of work miners are mining more Bitcoin. Ethereum, more Ethereum are coming onto the market every single day because people are approving transactions. Uniswap or all the dexes, more tokens are coming onto the market because people are providing liquidity. They are working hard for their money. I don't mind drowning in that kind of liquidity. And the reason why I don't mind drowning in that kind of liquidity is because every token has a value. The value of a Bitcoin that was mined is the value that people spent on electricity, and they will not sell it unless they get the cost plus the electricity back. The value that people get on LP is on providing liquidity for tokens is the value, the risk that they took providing liquidity to the protocol, the hack risk, the time value of money risk, etc., etc. Okay, so that is the value. And those kind of, if tokens are being released in liquidity mining, in ecosystem development, in proof of work mining, that's great tokens. What you got to be careful of is you don't want to be drowning in team, advisors, and VC tokens. And when you are, or when you can see that you are, then ask yourself a question. Is buy and hold really the best attitude? Or sometimes, is it better to wait? Even if you like Moonbeam, and again I say, when Moonbeam launched, I love Moonbeam. But is it better for me just to wait until the VC start to sell, the team start to sell, and then to start buying? And so the right strategy wouldn't have been to buy early, but it would have been to just sit back and watch and have the upper hand on everybody else who didn't look at the emission schedule, who didn't know this. Now, this is available for almost every single token in the world. And say to yourself, hold on a second. Maybe the best place to buy is when there's a little spike here in emissions. And all these VCs and that start wanting to get out. And when they sell, that's when you want to be buying in. All right, that's me. I probably shouldn't have said that because the VCs don't want you to know it, because where are they going to get the exit liquidity from? But you need to know it because for us, community comes first. And no matter how much the VCs don't like what we have to say, even though we are VCs, well, we need to protect our community first at all costs. And that's why you need to know this. Don't fall for it. I don't want my community to be shark feed. I'll see you guys again tomorrow. Until then, invest well, my friends.